We are back, but this week was more of the same with ups and downs off news in Iran. But as of now, it does seem like pretty clear that nothing is close to getting resolved. And the pattern just kind of repeated itself almost daily. We'd get any kind of hint of a ceasefire or peace talk, and that would send oil prices lower and bonds higher. But any sign of escalation sent oil back up and rates with it. Trump did announce a 48-hour ultimatum to Iran, then postpone military action for 5 days while talks continue. Iran has publicly denied any talks are happening at all, and more U.S. troops did just arrive, and he's sending more, it seems. The Gulf countries have basically said they've had enough, and they're ready to defend themselves. Oil did end the week back above $110 a barrel, and mortgage-backed securities and rates had another bad week as a result. And here's the really frustrating part. The underlying economic numbers continue to point toward rate relief. We got ADP weekly numbers showing only 10,000 jobs added per week through early March. Extremely weak. The rental market is also cooling fast. We got new rents the new rents number, and it showed they're down 1.7% year over year. And vacancy rates are at record highs going back to 2017. And that's the kind of info that should be pushing rates lower, but oil news and things in Iran is overriding everything right now. And one thing I thought was worth noting on oil, Barry Habib made the point that while higher oil prices are immediately inflationary, which is not good for mortgage rates, over time they do tend to actually be deflationary because people cut back on spending across the board. That is obviously a longer term dynamic, but it's worth keeping in mind when you've got clients asking whether rates will ever come down. Jobs week is next week, so we're going to get JOLTS, job openings and labor turnover survey, ADP jobless claims, and the BLS report. Those numbers will matter, but Iran will likely matter a whole lot more unless we see a real resolution or some news there. One industry note worth flagging, Better and Coinbase launched a product that lets borrowers actually use Bitcoin or USDC as collateral for a down payment without selling their crypto, which would trigger a taxable event. So the pledged assets are only at risk if the borrower goes 60 days delinquent. Coinbase One members also get a 1% rebate. That's capped at $10,000. It's an interesting product for the right client, and we've got options for people that are cryptocurrency holders as well. So just let me know if you've got any questions there, but I'll see you next Friday.